Hey, it's Mason from Mason's Forex Trading and Investments. Please take note of the risk disclaimer. Everything provided in this video is strictly for educational purposes. Please subscribe to this YouTube channel. Like and share this video with your friends and your family. So in today's video, we will be covering the average true range indicator. So what is the ATR all about? It is a free indicator on MetaTrader 4 which shows the volatility in the market. We can use this amazing tool to help with stop loss placement. The 14-day period ATR gives us the average volatility for the previous 14 days. What do I really love about this amazing indicator? It allows me to create a stop loss based on the previous market movements, which are never consistent. It's easy to use. It eliminates the guesswork, inconsistencies with determining a stop loss. It reduces my anxiety and creates more consistency in my actions. So now let me take you to the MetaTrader 4 platform so we can look for examples and I can show you how to use this lovely indicator. So we have the US Tech daily chart, or otherwise known as NASDAQ 100. If you go to Insert and you go to Indicators and you click Average True Range, what you'll notice is by default we have a period of 14. And if you click this tab, we can actually change the color. And on this tab, we can alter the thickness of the line which is shown. Now, if you look at the current value, which is approximately 160.55, this is equivalent to 1 ATR. And furthermore, we can say this is 1,605.5 pips. This is just for information purposes and to show you how to read the ATR for NASDAQ. Now let us see if we can find an example. Now, if you look at the charts, we also have a red exponential moving average. So it is the 50 period. If you zoom out, you'll notice that more often than not, price has been above the red moving average. I'm going to use this particular example for illustration purposes. If you notice, price reaches this significant area. As price pushes up into this area, it moves away. Furthermore, as price pushes up again, passes this area and retraces into this area. Furthermore, it pushes up, retraces into this area again, and once more again pushes higher And we're now looking for entry signal, which price comes back into this area of value or area of significance. So if you look at our candlestick formations, in our case, I'm going to be using this red candle, this pin bar or doji, and this green engulfing bar. In combination, this would be our entry, E for entry and S for signal. So I would now go to the crosshair tool. In our case, if you place the ATR tool directly in line with the engulfing bar and you read, you'll see the figures approximately 261.88. In this example, rather 265.81. So in our case, I'm just going to use 265. So 265 would be 2,650 pips. So I'm just going to assume it to be here, or roughly in that position or that area. So from the low of the doji or small candle, open bar, whatever you wish to define it, we can say that this would be our stop loss based on our ATR. This would form first example. So this black line would represent SL, which is your stop loss, and the close of the engulfing bar would form the entry. If I had to draw it for you, low of the candle to this point, this would be the stop loss. Let's see if I can do one more example for the Australian dollar USD. Let us look at the 4-hour chart. If you notice, price comes into the significant level or area. From this point, price pushes lower, reaches the significant point, and moves away. Eventually, price moves lower, retraces into this level, and moves away. We can now say S for support and R for resistance. Support now changes into resistance. In our case, we once again have a 3-bar reversal signal. So this green candle here, this doji candle, and this red candle form a 3-bar reversal. And in our case, we're looking for short positions or selling positions. If I had to draw this for you, I would draw it something like this. This would be our entry signal again, which is ES. Again, we're going to use the ATR. If you notice the ATR, it's 0.026. See if you can take a few seconds to determine what is that value, just for knowledge purposes. So if you've guessed, at current price, we have a 26 pip ATR. Now in our case, our entry bar and our ATR, we've got to align it or go to the close of this red candle. So you'll notice that the value is approximately 0.0030, which is 30 pips. In our case, I'll place 30 pips approximately here, just for explanation purposes. So it'll be from this high of the candle, the doji bar. Okay, so that will be approximately 30 pips. We can now define this as area from candle. This will be our stop loss, SL. E for entry at this point. And if we were looking for short positions, we would look for lower prices moving or going lower. So we've come to the end of this video. Until the next video, goodbye.